Hello, everybody. Welcome to the Cash Flow Capitalist Podcast. My name is Daniel Wynn. In this podcast, I want to talk about the two reasons why I do not like to own investment real estate. And you're probably wondering, well, Dan, I thought you're in private lending and you like owning real estate. Yes, I am in those businesses, but that doesn't mean that I actually like owning real estate. So let me give you a couple of reasons. Number one is, let me give you a little bit of beef. Let me talk a little bit about my background. I've been in the private lending business for over 30 years. And in that time, I've bought literally hundreds of properties and I've made thousands of loans. And what I've learned over time is that real estate is a great vehicle. So just like a bus, you get on it, you get back off. You enjoy it and then you get off. It doesn't mean that you have to be so strong in your belief that it's only real estate, it's only rentals, it's only rehabs. I'm asking you to have flexibility, to think about the different reasons why you want to own real estate. You don't want to own real estate because you want to deal with tenants, termites, and toilets. You want to own real estate because you're looking for cash flow, financial security, long-term wealth, equity accumulation. So those are the reasons why you probably want to own real estate. But I'm going to give you the reasons why I don't like real estate, and let's see who wins at the end, okay? So in this discussion today, or in this presentation, I want to talk about the reason why I don't like real estate. Number one, debt. Number two, taxes, and all the other expenses that come along with owning real estate. But here's the three that I really don't like: tenants, termites, and toilets. So let's get into this, right? The financial burden of debt, taxes, and expenses cannot be understated. Anytime somebody takes out a definition of mortgage is death grip, right? Anybody that takes out a mortgage is taking on a responsibility, right? They're signing some paperwork and they're getting the money and they're promising that they're going to pay that mortgage back and the loan associated with that mortgage. But that mortgage is very easy to sign the paper and get the house or get the rehab money. But you have to be able to manage this business. You have to be able to manage the debt. Once you take on the mortgage, you also have to pay real estate taxes, insurance, utilities. I feel like anytime I do a rehab project in the past, it's like I got three kids at once. I just got three children that always need something, right? Shoes, schooling, books, whatever. So when you take out a mortgage, um, you have to be very, very careful how you use that leverage. Another reason why this can be dangerous is because real estate is famous for having bubbles and market crashes. Over time, real estate doesn't always go up, even though that's kind of what people think. So, go back to the great crash in 2008. Everybody was buying property, 80-20 loans. You can get, all you had to do was fog a mirror. You can get a mortgage, and then the bottom fell out, right? So hopefully that won't happen in your near future, but it has happened to me in my lifetime. The next reason that I don't like dealing with real estate investment property is because of taxes. Even though, the tax bill is one number today, it could be another number tomorrow, meaning that taxes don't stay stagnant. They go up and they eat into your cash flow. So in Chicago, I just saw online that some people had like a 37% increase in their tax bill. Could you imagine that? I've seen some incredibly high tax bills for people in around the country and especially in Illinois where the taxes are outrageous. Sometimes, so besides the taxes, you also have taxes on capital gains when you go to sell that property in the future. So you're going to have to work all your life to keep the property up, keep it maintained, do all these things. Now you finally get a gain and you sell it, and then your Uncle Sam gets half or whatever percentage of the profit that they get. Last but not least, other expenses. Anytime you own property, you have to deal with repairs, right? Broken toilets or roof, water heaters, heating and air conditioning, windows, There's so many things that have to be maintained when you own rental property, and there's so many things you have to fix when you do a fix and flip. So these expenses can add up. Insurance is rising around the country, especially if you live in a flood zone. HOA fees if you live in an HOA. And then last but not least, if you improperly manage that property, you don't get the right tenants in there, you don't manage it properly, or your property management company does not manage it properly, you could be losing money instead of gaining the money, which was the reason why you wanted to get into this game of owning rental properties and rehabs. Okay, the next part. Let's talk about the thing that the real reason why I don't like owning rental property. I don't like dealing with tenants, termites, and toilets. Why is that, Dan? Why don't you like dealing with that? Well, it's simple. I dealt with that in the past, right? When I was younger, I thought it was going to be great. I was going to buy all these properties, create all this equity, get all this cash flow on my rentals. And yes, sometimes I made some really good rents. But over time, I had to deal with a lot of issues. People rent for 1 year, 2 years, then they leave. Then you got to remodel the property again. Sometimes when I was doing rehabs, oh man, I really dislike doing rehabs. 5 years ago, I tried doing a few rehabs, and these rehab properties, sometimes the contractor, we do a FaceTime or a Zoom, and he would show me all the work that he wanted to get paid on, and I would pay them. Then a week or two later, I would go to the property, and the work was not completed, right? They left out the parts or the videos or the pictures of the little details that were supposed to be done when I was paying them for doing that work. Then there's always these unexpected expenses that come up. Oh, when we took this apart, this thing now has to be replaced. So there was always surprises when I was owning rental rehab properties and rental properties. So for this reason, I don't like dealing with tenants, termites, and toilets. Tenants are a whole nother subject. You have to get really lucky, or you have to be really good at managing tenants. And it is a good business for those business people that want to deal with that and are good at dealing with it. I'm just telling you at my this time in my life that I don't want to deal with these things. I would rather share with you some other options that you could make really good money in real estate without having tenants, termites, and toilets. So let's go over this. Let's go over the counterpoints. When is owning real estate when will owning real estate make sense for you? Try to get rid of this stuff. When will owning real estate make sense for you? Well, like I said a minute ago, if you have experience dealing with contractors, renters, and running a business and being a good operator, then this may be the right thing for you, the right investment vehicle for you. If you have the time to be active in dealing with all these related issues, tenants, contractors, invoices, paying all the bills, then yes, this might be the right investment for you. And so why own it? That's obvious, right? People want to own rental property and investment properties because they're looking for financial gain. They're looking for passive income, right? They want to get the spread between what their monthly expenses are and what the rents are. They're looking for long-term appreciation, which happens, right? There's a lot of waves, and we're currently in one of them right now. So those are the reasons why they want passive income, they want long-term appreciation and wealth accumulation. And for those reasons, if you want to gain wealth and gain those benefits, then that would be a reason for you to invest in real estate. So those people that are good operators, I'm a private lender, so I see people that are good operators and I see people that don't operate their businesses great. So hopefully if you decide to do this, you will be a good operator. then you can thrive in this business. But let me go over the alternatives to owning real estate, right? So you could become a private lender, a real estate lender. When you are a private lender, this can be less risky and more profitable without the headaches of ownership. Let me give you an example. So I'm a private lender, and I lend my own money, and I lend other people's money that want to lend with me, and we underwrite with conservative loan to value. We keep our loan to value in check. We do take risks, but we take very calculated risk, and we get an above average yield. Most of the time over the last 10 years, we've earned a 12% interest or greater. And we have a default interest rate that we build into our loans. So even when our loans don't perform as agreed, we oftentimes can double our money because we have a default interest rate that allows us to collect extra for the aggravation. Another reason why you want to be considered a private money lender is because one of the I never could have thought. Here, let me give you another reason why I like being a private money lender. When I first started doing this, I wanted the origination fee up front, and I wanted the spread. I wanted the interest off that I was gaining from these loans, right? I never anticipated, because we have conservative loan to values, that we could become so profitable working out our problems, right? Let me give you two examples. Number one, we foreclosed on a property owner that didn't finish the project, or for some reason, bailed and didn't pay the mortgage. We end up getting the property. Sometimes we didn't have to do anything, and we could sell the properties for a lot more than what was owed us. So we get a bonus for doing that, right? Another example is sometimes when we were the lender and we were charging the default interest rate, like I was saying, 24%. Sometimes those would go to court for a couple of years. So that becomes a lot of money and interest that's built up. And because we underwrite at a low loan to value, we were able to, the people with maybe a week before the foreclosure, the last day to pay, or a month before the last day to pay, they actually sell the property and they pay us off in full. So we get all that default interest rate. So instead of earning 12%, we earn 24% or more, plus the legal fees, plus all costs that are associated with it. So those have really allowed us to be better private money lenders. And it would teach you too, like, this is why we want to continue being private money lenders, because even our problem files have become wins for us. Some other alternatives to owning real estate would be a real estate investment trust, right? These are big companies that buy real estate and they pull the money together, they collect the rents, they manage it, and they give great yields. Right now, you can go to the different companies out there, brokerage firms, and you can see that you can find companies, REITs, paying 10% interest or more. Obviously, if you don't want to be a real estate investor, you don't want to do private money lending, and you don't want to do REITs, then you could stick with stocks and bonds and more traditional investment products. So in conclusion, I gave you the reasons why I don't want to be a active owner of investment rental properties and rehab properties, because I don't like dealing with debt. I don't like dealing with taxes. I don't like dealing with unexpected expenses, tenants, termites, and toilets. And each person's going to make that decision for themselves. So I encourage you to find the best fit for you and your risk tolerance and your lifestyle. Now, in how do you say this? In conclusion, or in full disclosure, I own a lot of real estate as I sit here right now. And Victoria, who's recording this, was telling me, but you own all this real estate. And I said, yes, but it's like sitting in the garage or the warehouse until I can get rid of it. I don't own it because I want to rehab it. I don't own it because I want to rent them. I buy real estate when it's underpriced. I clean it up, do the minimal amount of work to try the maximal amount of income. And that is my journey that I'm on right now. Maybe that'll be a good fit for you in the future. You get to choose. I hope you enjoyed this podcast.